Hello. Before you go any further, you're going to need to make sure you've downloaded and printed off a copy of this revision of double entry and trial balance handout. I'm afraid it is about 9 pages long, but it takes you through double entry bookkeeping, the transactions, which accounts to debit, which accounts to credit, and then moves on to posting those transactions into T accounts and then assembling a trial balance to check that the arithmetic is all correct. So we're going to start with task 1. This is where we need to identify the differences between cash transactions and credit transactions. Now, if you remember, a cash transaction doesn't have to be paid for in cash. It merely means that the goods have been paid for at the time of the transaction, whereas a credit transaction is one where things have been paid for at a later date. So if we just read through these then, purchase of goods for £700, payable by cash, but in 1 week's time. So that's actually a credit transaction. Although it's paid for in cash, it's not paid for until a week's time. So we need to record the purchase of those goods when they're bought. So now we would debit purchases £700 and credit the supplier account with £700. When we pay for those in a week's time, we're going to debit the supplier account with £700 and credit the cash account to reduce the asset. If you're wondering what on earth I'm talking about and thinking, gosh, I'm very rusty on this, go back and have a look at the video that I've prepared covering the basics of double entry bookkeeping. So all the dear clip and what have you, that might well help. So writing a cheque for the purchase of a new printer, it's not paid for in cash, it's paid for by cheque. So that means it's coming out of the bank account. But this is defined as a cash transaction because it's paid for at the time of the purchase. Okay, sale of goods to a customer where the invoice accompanies the goods. So if we're raising an invoice, then that's likely to be a credit transaction, not a cash transaction. Those goods will be paid for at a later date. Receipt of a cheque from a customer for goods purchased today. That's going to be a cash transaction, even though it's paid for by cheque. The key there is that the goods were purchased today and they're being paid for today. And then finally, purchase of goods where payment is due in 3 weeks' time. That's going to be a credit transaction. The key there is the 3 weeks' time. Okay, so onto the double entry bookkeeping then. Task 2, it says enter the name of the accounts to be debited and credited. So we've got a number of transactions here and we need to write which account we're going to debit, which account we're going to credit. So opening transaction, classic introduction of capital. We've got somebody called John, presumably it's his business, paid £15,000 into a business bank account in order to start the business. So if you remember from your dear clip, assets, money in the bank is going to be on the debit side. So we're going to debit the bank account and we're going to credit the capital account. So we're recording the fact there that the owner has put in £15,000 of his own money. Okay, he's paid an initial rental of £5,000 by cheque for the shop from which he's to trade. So if something's paid for by cheque, it's going to come out of the bank account. So if money into the bank account was on the debit side, money out is going to be on the credit side. So we'll credit the bank account and we'll debit rent paid. Now remember, it's important that we put rent either paid or received. Sometimes businesses sublet part of their premises, so they may receive rent as well as paying it. So we need to make the distinction. Transaction number 3, he's purchased a van by cheque. So again, it's coming out of the bank, so we can credit the bank account, £7,800, and it's a van that he's bought. So we're going to set up a van account. It's going to be a non-current asset, remember on the statement of financial position. He's purchased £7,500 of goods for resale on credit from NWK Limited. Well, if you remember, purchases are a type of expense, so purchases are always a debit, whereas sales are always a credit. Debit purchases, we don't credit the bank or anything because we haven't paid for them yet, so we need to credit the supplier account, which in this case is NWK Limited, which is going to be part of your trade payables. Okay, he sold goods for £1,750. The customer has paid by cheque, so we're going to pay that money into the bank because we've received a cheque. So debit the bank account and credit sales. Okay, right, on to transaction number 6. He sold goods on credit to Gloss Limited. So Gloss Limited are going to be the trade receivable. Remember, sales is always going to be on the credit side, so that means we need to debit Gloss Limited to record the asset and on the current asset, trade receivable there on the debit side. Number 7, he's paid shop assistants wages by cheque, totaling £3,250. So it's coming out of the bank because it's by cheque. So we need to credit the bank to reduce the balance. And then we're going to record the expense the wages paid on the debit side there. Further sales have been made on credit to Gloss Limited, so we can do exactly the same as we did up here, number 6. We're going to debit Gloss Limited and we're going to credit sales. Number 9, purchased a further 2875 of goods for resale by cheque, so we're going to debit purchases, that's the expense, and because it's paid by cheque, we're going to credit the bank account. The money is coming out of the bank. 6525 was received from Gloss Limited. Now, if we look up here, Gloss Limited is a credit customer. So we're going to bank the cheque, pay it into the bank account, and then credit the Gloss Limited account with the 6525. So that will be reducing the amount that Gloss Limited owes to John. Number 11, he's paid 4,500 to NWK Limited by cheque. Now, if you look back to transaction number 4, NWK Limited are one of our credit suppliers. They're a trade payable. So he's paid them a cheque, so we're going to take it out of the bank account and we're going to debit the NWK account to record the payment there and reduce the amount that John owes to NWK Limited. Number 12, he withdrew £950 from the business bank account for his own use. So when the owner takes money for their own use, we call it drawings. We're going to take it out of the bank account, so we're going to credit the bank account and we'll debit drawings. Remember, that's the first one on the dear clip. Okay, so we've now got 12 transactions that we've worked out the double entry to. What we're going to do now is post each of these into the relevant T accounts. Okay, so only pages 3 and 4 here. So first transaction then, John paid £15,000 into a business bank account. So we need to debit the bank account with £15,000 to pay that money in. It's an asset, that's why it's on the debit side. So money in to the bank account, always on the debit side. Money out is on the credit side. And then remember that when we do T accounts, we describe the other half of the transaction. So we need to say where that money's come from, and it's going to be John's capital account. It's his own money he paid in. So on the capital account, we do the opposite. We put it in on the credit side. Capital is always a credit. Remember with the dear clip, it's the C at the start of clip. So we're going to credit the capital account and we describe where that money has come from. It's from the bank account. So we always put the corresponding entry so we can pair these transactions up, find the other half. Right, transaction number 2, then we paid some rent. So rent paid was paid through the bank account. Oops, you can't see that. So rent paid through the bank account was £5,000. So put that in the rent paid account. It's an expense. So rent paid you would always expect to see on the debit side. And then we're going to take that money out of the bank. I'm going to put in there rent paid, £5,000. Okay, transaction number 3, he's purchased a van. So we're going to take the money out of the bank account, £7,800. And we're going to put that into the van account where we write bank. Sorry, keep forgetting to move the paper up and down. You can't see all of this in one shot. So £7,800 in there. So that's transaction number 3. Number 4, he's purchased some goods on credit. So let's move over onto this page. So we've got the purchases account here at the top. So the purchases that he made in number 4 were from NWK Limited. So we'll write the name of the supplier in there. Okay, purchases is a type of expense, always going to be on the debit side. And then we're going to credit NWK Limited with 7,500 to record the fact that it's a liability. So this one is a trade payable, it'll be under current liabilities, therefore it's going to be a credit balance. And remember the P in dear clip, payables on the credit side when we buy goods initially. Right, number 5, he's made some sales. So he sold £1,750 worth of goods and the customer is paid by cheque. So we're going to be paying that money into the bank. Let's record the sale. Sales is always a credit because it's a type of income. So we're going to pay 1,750 into the bank, and then we look at our bank account here. We're going to describe sales is where the money has come from. 1,750 paid in by cheque. Okay, so that's transactions numbers 1 to 5 done. Number 6, he sold goods on credit to Gloss Limited. So we still credit the sales account, but this time the money hasn't been received yet. So we're going to debit the Gloss Limited account to record £8,300 worth. This is transaction number 6. So Gloss Limited, £8,300. Transaction number 7, he's paid some wages through the bank account. So let's take the money out of the bank. So wages paid, we got 3,250. And then we need to find the wages account, which is on the 3rd page. There's the wages account. We're going to debit that with 3,250, so paid through the bank. Normally with these T accounts, you'd have a date column as well, but we haven't worried about any dates with this, just to keep it nice and simple. Okay, further sales have been made to Gloss Limited, so we need the 2nd page for this one. We've got some double entry going on between the sales account and Gloss Limited. So transaction number 8, this time he's paid, he's sold £5,310 worth to Gloss Limited. So we need to debit Gloss Limited's account because they haven't paid for those goods yet. Okay, made some more purchases. Transaction number 9, purchases paid for immediately. So these are cash purchases, 2,875, paid for out of the bank account. So we need to take that money out of the bank account there. So credit the bank, purchases with, how much was it? 2,875. Okay, so the double entry there, debit the purchases and credit the bank account. That was number 9. Number 10 then, we've received a cheque from Gloss Limited, so let's pay that into the bank. So debit the bank account, £6,525, and then credit the Gloss Limited account. Be careful not to credit sales. We've already included the sales to them in the sales income account. So we need to credit the Gloss Limited account by the 6,525 that we've just banked, 6,525, and that's going to have the effect of reducing the amount that Gloss Limited owes. So on the debit side, we've got the stuff we've sold to them, and on the credit side, we've got the money that we've received from them. On the credit side, we might also have discounts. If we've given them any discount for prompt payments, so cash discounts would go in there as well. And any goods that they've returned to us, so if we had sales returns inwards, then they would be credited to the Gloss Limited account, debited to returns inwards. Right, back to the double entry then. He's paid NWK Limited by cheque. So remember, when we pay money out of the bank, it goes in on the credit side, money out. £4,500 has been paid to NWK. So credit the bank, and then we need to find the NWK account because it's reduced the amount that he owes to them by £4,500. So we're going to debit the NWK account. And then number 12, he's withdrawn £950 for his own use. So in the bank account, we've got drawings, £950. And then we need to find the drawings account, which is on here, page 3, I think. So there it is. So let's record that. It's paid through the bank, £950. Okay, so that should be all of the transactions now posted into these ledger accounts, into these T accounts. So next thing we need to do is look at how we can balance those off. So once we've got all the transactions in, we need to balance off the T account. So just a reminder of how to do that. We need to do some lines. So always leave a line after the last transaction and do some parallel lines to total it up. Okay, and then all we've got to do, get the trusty calculator out, 15,000, 1750, 6525. So add up both sides. It might be an idea just to write that number away somewhere. So 23,275 is on the debit side. Then add up the credit side, 5,000, 7,800, 3,250, 2,875, 4,500. and 950. So we've got 24,375 on the credit side. Okay. So that means that we're actually overdrawn. We've got more on the credit side, so we've paid out more than we've paid in. So if we do 24,375 375 minus 23275. We're actually overdrawn. We've got £1,100 more on this credit side than on the debit side. So what we're going to need to do is make both of these sides add up to 24,375. 24,375. So that means we need to put 1,100 on here to force it to add up. So that's your BAL CD. And then it comes across diagonally at the start of the next month. So BAL BD, 1,100. And it's on the credit side. It's a liability because it's a bank overdraft. Okay. Capital account, we don't need to balance off. There's only one transaction in there, £15,000 credit. So there's no point doing the whole balance carry down. Same for the rent account and the van account. But let's just look at one of the others. So we've got the purchases account at the top here has got two transactions. So what we can do there, leave a line. It's fairly obvious here that it's going to be a debit balance. So 7,500 plus 2875 gives us 10,375 on there. So we need to make both sides add up to the same. And the way we do it is BAL CD 10,375. And remember, it comes down diagonally on the debit side. So our BAL BD 10,375. Okay, do the same with the NWK account. So two sets of parallel lines here. We've got 7,500 on the credit side, which is bigger than the 4,500 on the debit side. One away from the other. The difference is £3,000 to force that to add up, and that is your balance carried down, which comes across as a BAL BD at the start of the next month. £3,000. Okay, sales account. Again, we haven't got anything on the debit side, so BAL CD is going to be there. I'm not going to leave a line this time because I haven't got enough room. So it's just a case of adding those three up. 1,750 plus 8,300 plus 5,310, 15,360. So that's going to be our balance carried down, 15,360. And then balance brought down comes diagonally across 15,360. Okay, so you can do all of those, finish those off, Gloss Limited, balance them all off, and I'll meet you back here when we've both done it. So there was actually only one more account to balance off, Gloss Limited. I made that a balance brought down of 7,085. It's on the debit side because it's a trade receivable. The other two accounts on this side, the wages account and the drawings account, both just single entry, so we don't need to worry about balancing those off. Okay, so once we've done the balancing off, we can then extract a trial balance. Now remember, this is the thing that checks that the arithmetic is correct. It doesn't necessarily reassure us that everything is in the right place, but if the trial balance agrees, i.e. the debits and the credits are equal, then we can be certain that the arithmetic is correct. We could still have things like an error of omission in there, so we might have missed something out completely, which would not show up on the trial balance. But if we omitted an entire account, say for example we forgot to put drawings in, then we would find that we should be £950 out on the trial balance. So all we've got to do then is, starting at the top, put all of these balances onto the trial balance. So if you remember, the bank account was overdrawn by £1,100, so we're going to write bank account in here, up a bit, bank account, and it's going to go in on the credit side. So it's wherever it lands up at the start of the next month. Don't be tempted to put it in as a debit balance. It's not, it's an overdraft. This is merely to take the overall credit balance of £1,100 out of 1 month and bring it into the next month. So it's wherever it lands up. Capital account is £15,000, also on the credit side. So we can pop that in there. The rent account, £5,000. This was rent paid, £5,000 on the debit side. The van account, 7,800, also on the debit side because it's an asset. Over to the second page, we have purchases that total 10,375, so we can pop those in there. 10,375, and then the NWK account had a balance of £3,000. So NWK Limited, 3,000. That's on the credit side. It's a liability. It's a trade payable. The sales account, credit balance of 15,360. Sales 15,360. Gloss Limited owed 7,085. So that's on the debit side. Gloss Limited. And then at the top of this page, we've got the wages. So the wages were 3,250. And we've also got the drawings account 950. Okay, so what we now need to do is check that the debits and the credits are equal. So again, we'll draw two parallel lines and then add up the debit and the credit balances. So we've got 5,000, 7,800, 10,375, 7,085, 3,250, and 950. So a total of 34,460 on the debit side, and then 1,100 plus 1,500, 15,000, 3,000, and 15,360, and 3,4,460. So we can give ourselves a smiley face there. That adds up. Debits and credits are equal. So that means that the arithmetic is correct. So from there, we could draw up an income statement and a statement of financial position. So the trial balance, the purpose of it is to check that the arithmetic's correct and to help locate any errors. So these are the one-sided errors, the roux errors. So where we've got reversal of entries, we've perhaps put two debits in instead of a debit and a credit. An error of omission where we've missed out one half of the entry, or we've missed out one of these accounts. That would cause the trial balance not to agree, or an error of original entry. So say, for example, with this 15,000, we debited the bank 15,000, but only credited the capital account with 1,500. That error of original entry would just be on one side, and that would cause the trial balance to not agree. So have a go at the rest of the questions on that handout, and then check your answers and let me know if you have any problems. Thank you for watching.